This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. We are seeing kind of the market die down a little bit as we head into this Easter weekend. Corn trading in a 2 1/4 sit, basically like watching paint dry and hovering right around the middle of the recent range. The recent range over the past several weeks, 355 to 365, kind of right near that 360 level, which happens to be where a lot of open interest is for the May options that expire next week, both puts and calls. So this could be a little bit of a magnet for the next week. Now, with that said, going out a little bit further, we've been talking about the big fund position, the net short position that the funds have. What's flying under the radar, however, is a producer net long position, which is very rare in this market. So we've been talking about the potential of a short covering rally from the funds. However, with the producers holding a net long position, the producers are going to be there waiting and willing to sell, which could limit the velocity of a short covering rally. Now, with that said, there's going to be a lot of attention on weather going forward. If about 2 weeks out, it's going to become an increasing factor. If it continues to maybe delay things, we could potentially see a bigger spike. But for the next week or two, I wouldn't be surprised to see the market stay in a consolidated range until we get through the May futures and options. Now, moving over to the soybean market, soybeans have really been grinding lower over the past 2 months, making a trend of lower highs and lower lows since the February 1st spike high. We've seen the trade headlines try to put optimism into the market, but the prices are not reflecting that, which leads us to believe we're probably a lot further away from a trade deal than a lot of people actually want. And as we've stated several times before, we think that China has a little bit of leverage going into this campaign cycle, and we wouldn't be surprised to see potentially President Trump maybe concede a little bit to drum up his base and reach a deal when we get into the meat of the election cycle next year. Now, moving over to the wheat market had a big technical breakdown below the low end of the range on Tuesday. That was 455. That really opens the door for a potential retest of contract lows at 427. Resistance is previous support, 455. In order to prevent a retest of those contract lows, bulls want to see consecutive closes back above 455 for that Chicago contract. So that's what we're looking at. That's what you should be looking at too. It's been Oliver Slope with Blue Line Futures from the floor of the CME.